All right, in this video, we're picking up on Learning Objective 1.4, and we're going to go all the way through 7 in this video. So here is the FASB's standard setting process. They give you these steps and then an explanation. I'm not going to go into a lot of detail on that because it's just the process of how they set a standard, okay? So let's kind of jump into, because we're talking about this process, but this standard setting process is very political. Okay. So it's very political, and what's going on in politics a lot of times will affect our accounting standards. Okay. So in the mid 1990s, accounting for stock options was something that had to be done because before there wasn't an expense being hit on the income statement when it comes to employee stock options, but employees were getting something. Okay. So then the implementation of fair value accounting standard was issued in 2007. Now, when I say fair value accounting, this are a few things that we can use fair value because for the most part we're going to use historical cost. Okay, but some investments like a stock, if you own some shares of stock that's traded on the New York Stock Exchange, it's pretty easy to go and find what the fair value of that stock is. Okay. So for things like that, it does kind of work out really good. There are other things that is really hard to get a good fair value on, like a building. I've used this example over the years. There's a huge Caterpillar plant out past the airport in Little Rock, and long time ago when VHS tapes were being made. That was actually, I think they called it deluxe video. Okay. Well, no more VHS tapes. And so they went out of business, and that building sat there empty for a long time until Caterpillar bought it. And so, like, it's really hard to get a good fair market value on something like that, obviously, because it sat there for so long. There's not a big market for somebody looking to buy a production facility. Okay. So things like that, it's really hard to get a fair value on. Okay. There is a lot of politics. Notice the learning objective kind of flipped over to that international um, objective, but we're still within our objective that we're covering. There is politics in the international standard setting scene. Okay. Lobbyists will put a lot of pressure on the boards to pass different rules. And so, what I thought was so interesting, so they come all the way down here. Um, and this guy, Charlie McCreevy, European Commissioner for Internal Markets and Service, stated that accounting is now far too important to be left to accountants. I just find that hilarious because you would think accountants would know best about how to report things. Basically, we as accountants, we just follow the rules. Like the standards are already set. That is set in a political process. Okay. Let's talk about an auditor. Okay. A lot of students get confused thinking, oh, that sounds like a IRS auditor. They think that is a bad thing. It's really not. We're not talking about an IRS audit. We are talking about a financial statement audit. This is where a certified public accountant goes into a business and they look at the financial statements. They are not saying this is a good company to invest in, put your money here, don't put your money. They're not saying that at all. All they're doing is expressing an opinion on the compliance of the financial statements with GAAP. And if they're using IFRS, then they will say IFRS. Okay. They will say these financial statements are in accordance with international financial reporting standards. Okay. So they're expressing opinion that is not an absolute. Okay. They don't do absolutes in accounting or in auditing. That's not a guarantee that 100% of the accounting records are perfect. Nope. In their opinion, there's no material misstatements. That's the legal terminology that is used. Okay. So that is what an auditor does. actually the you only need a CPA license to sign an audit, but it will always get you more money everywhere you go because you have passed that incredibly hard test. Okay. And as of right now, in the fall of 2025, the rules to sit for the CPA exam are currently changing. Okay. So let's talk about financial reporting reform. We had a lot of accounting scandals, the two biggest ones, Enron and WorldCom. And at this point, those were 23 years ago. I was still in college and I heard about Sarbanes-Oxley every single day of my college career because it was the big thing. If you think back to the Great Depression, I mean, that's what's going to be talked about every single day. And that's what Enron and WorldCom, and that brought about legislation called Sarbanes-Oxley. Okay. We had rules in accounting. We had ethics. They sometimes seem like it's the wild, wild west of accounting when they talk about we needed Sarbanes-Oxley. We had rules. We did have rules, but shares of stock were issued to the general public, and so there had to be something to restore credibility and investor confidence. Okay. We all know that Sarbanes-Oxley hasn't kept accounting frauds from happening over 23 years. It created a lot more work. It does penalize the people who break the law a lot more now, but there's been accounting fraud since Sarbanes-Oxley. Sarbanes-Oxley didn't make all accounting frauds go away because people are going to be humans and, sometimes they are greedy. Okay. So sometimes they question from a principles base versus rules base. So I kind of talked about those other organizations. So now we're at the FASB, and those other ones, they were more rules based. Okay. Something would happen, they'd make a rule. Something happened, they make a rule. They never had that conceptual framework. Okay. And so now, I mean, the FASB's been there for, I think, almost as long as I've been alive, maybe a little bit older. And I think that's probably why they do have so much success is because they actually have a conceptual framework. We have a framework to go by to help us. So if there's not a rule about a transaction, we can go to that framework and that framework will help us figure out how to answer and how to account for a transaction. Okay. So it doesn't really matter which one of these we use. Poor ethical values on the part of management are at the heart of accounting abuses and scandal. So I love that we're actually finally just holding management accountable for their bad actions, not punishing anybody else. Okay. Um, so every profession pretty much has a code of professional conduct. In accounting, you have to be very squeaky clean when it comes to accounting and sitting for the CPA exam. There's a question that's asked when you're filling out your application. Like this can be very vague. Has your integrity ever been questioned? I think most of us would say no, but I mean, somebody else's opinion might say that. So, I mean, that sounds very vague, but that is a question they ask. Okay. And, that could just be as simple as a disagreement right there. Okay. Um, and yeah, I actually had something like that. I don't know. Um, Maybe my integrity was questioned, but I had proof that what it was being questioned was actually false. So that happened in my bookkeeping job. Somebody had stole the Home Depot credit card bill, got the card number out, and had went to Home Depot and spent like tens of thousands of dollars. And one of the things they bought was like a riding lawnmower. Well, I just bought a house, and I bought a riding lawnmower. Mine was a clearance special for $600 from Walmart. And I went to work Monday morning. Oh, like, hey, well, we had to buy a new lawnmower this weekend. Oh, and then so the comment was made, well, I guess you're the one that stole the Home Depot card. And I was like, what? These people knew me since I was 19 years old. I think it was meant as a joke. But I was like, well, I'm not joking. I will bring you my receipt of my riding lawnmower that I bought because we had just bought a house and we had a lot bigger yard. So I said, I can guarantee you that wasn't me. Even though I probably had access to that number, I could prove that the lawnmower that I bought was mine and I didn't steal that. We kind of deducted what happened. We had a little basket that I would put the bills in, or all of us, we would put mail in, outgoing mail. Well, I put that, I put those bills in the basket. That's what I was supposed to do. And we think that a desk clerk pulled it, opened it up, probably got the card number on it, and then probably put the check back in the envelope and then sent it on. So we never knew that the card number was compromised. So, and Home Depot took all the charges off, and Home Depot did not even go after that person because by the time we found it, she wasn't working there anymore. So I think her parole officer or probation officer called a few days later. And so, yeah, we figured out who it was, but it wasn't me. But maybe my integrity was questioned just a little bit. Okay. So we have the AICPA. AICPA, pretty much the only thing it does now is administer the CPA exam. Okay. It used to have a prominence. It was, there is a public accounting oversight board, and the ASCPA used to be that, but with Sarbanes-Oxley came the PCAOB, Public Companies Accounting Board. I can't remember what the O is right now. Okay. All right. Then we have the Institute of Management Accountants and then the Institute of Internal Accountants. And there's more certifications than just the CPA. You can do CIA, Certified Internal Auditor. Um, you can do CMA, Certified Managerial Accountant. There's a lot of different things that you could actually get letters behind your name. Okay. Analytical model for ethical decisions. This would work really good for just about anything. Again, I'm not going to go through this verbatim. Just kind of start at the beginning. Determine the facts of the situation, and this involves determining who, what, when, where, when, and how. Okay, all the way down to making the decision. So this is a really good ethical decision model that might help you if you are in a situation. I've probably not ever been in a situation where I needed this big model. One situation I was in was there was a journal entry that my boss had asked me to make, and I said, I don't really understand this journal entry. Why are we making it? And he kept trying to explain it to me, and it just never made sense in my mind. And so I said, I'd feel more comfortable if you logged in because he was the owner. I'd feel more comfortable if you logged into the system and you made that journal entry. And, I probably could have gotten fired, been like, okay, if you're not going to do what I tell you to do, then you're fired. But I just didn't feel comfortable making that entry because I didn't understand it. And even as I've went further in my career, I still look back on that entry and I still don't understand it. I did not want my name attached or my initials, HMS, attached to a journal entry that could be fraud. Okay. So. All right, so we have a few questions here. For the sake of the video, I am going to kind of jump on down. Okay, y'all do have access to these PowerPoints in Canvas, so you can go back and find those and read through that if you'd like. All right, now we're going to talk about the conceptual framework. I thought this was funny. I've never heard of it called the Accounting Constitution. That does make perfect sense because, like I said, FASB's been around for a while, and the reason being was the conceptual framework. And, we're still a relatively new country in terms of other countries that's been around a lot longer than us, but we find that our Constitution is timeless. Things that are happening today, it still applies. Okay. So this provides an underlying foundation for the U.S. accounting standards. It guides the selection of events to be accounted for, the measurement of those, and then means of summarizing, communicating them to interested parties. Okay. Gives us some structure. and disseminated by the FASB through statements of financial accounting concepts. Okay, so that's more of like an explanation. Okay. Um, this is not the entire framework. I believe they'll have a slide coming up that'll have the entire conceptual framework on one slide. Okay. We have lots of things going on here. We talk about the objective. We have the elements. We're going to break down a lot of these different things in the coming slides. Okay. Um, International Financial Reporting Standards role of the conceptual framework. So this framework is very similar actually to IFRS. Okay. There is a convergence. There is a movement to try to get GAAP and IFRS to be closer to each other. Okay. Like I've said a couple of times now, I think probably by the time before you retire, you'll probably see these converge completely. And maybe it will take um, different politicians. I'm not sure. We actually will be doing international accounting in the spring. Coming up, spring of 26. I always try to get my accounting majors in that class because it counts as another upper level accounting class for you to say, take the CPA exam. Okay. And then you're very valuable, especially, we will have some international students in that class. It's not a class for accounting majors, it's for the international business majors, but I'm the one that teaches the class. So most of my accounting majors need an elective, so I always try to get them in there. Okay. All right. So sometimes the way these slides, they don't do real great when they're transferred over to OneNote. So let's kind of look at this. Okay. We're going to break this down. This is the hierarchy of qualitative characteristics of financial information. And I am hoping, nope. Okay. So we're going to talk through these. So decision usefulness. Okay, I'm going to start right here. And we're going to work our way down through here. Okay. Faithful representation. Okay. When these financial statements are published and out there for the general public, we want them to be a faithful representation of what is really going on in the company. Okay. It needs to be complete. It needs these three characteristics to have that faithful representation. It needs to be complete. Journal entries haven't been left off. Journal entries didn't get moved to the next year to make the financial statements this year look good. Okay. And that comes completeness. We'll talk more about that in auditing. Okay. Neutrality. The information needs to be neutral. It doesn't need to have any bias. And as an auditor, we're not going to just take management's word at what the financial statements say. We want to back those numbers up. So just say, for instance, Walmart says they got $1 million in their checking account. It may be more, but they say they have $1 million in their checking account. We are not just going to take their word for it. We're going to go find a bank statement or a bank cutoff statement, and we're going to find out, is that true? Okay. It's neutral. Okay. Free from error. I would guess that it's not going to be 100% free from error, but we'll talk about materiality. We can say it's free from error. If there is an error in there, it's an immaterial amount. It won't change the way we make decisions. Okay. So keep that in mind. Okay. Let's jump over here to relevance. Okay. Relevance, we want to make sure that the information we have is relevant. I always use this example. Financial statements from 20 years ago, are they really relevant today? Is the bank cutoff statement from 20 years ago relevant? It's really not. I mean, that's old stuff. We don't really care about that. Okay. Um, so what makes it relevant? Okay. Has a predictive value. Do these numbers have some sort of predictive value? Okay. Then you want to know, does it have a confirmatory value? Kind of mentioned that when I talked about neutrality. Confirmatory, we can confirm with the bank that Walmart actually has $1 million in there. Okay. Materiality, what is material to me and you is not material to a bigger business. So whereas $100 to me and you, that's very material. Okay. We're going to stay up late at night worried about where did we lose that. Okay. But $100 to Walmart is going to be very immaterial. It will not change anybody's decision on what to do. Okay. So what's material to me for one business might not be material for the other. Okay. All right. So you see this decision usefulness, it comes down and it touches those two, and then it comes down here to all of these. Okay. Let's start over here. Understandability. Understandability is very important. As a matter of fact, I can't remember which one it was. Enron or WorldCom actually disclosed what they were doing, the accounting fraud they were doing. They actually disclosed it in the notes, but nobody could read it and understand it. Okay, it was not understandable. Now looking back, seeing the fraud and reading it, you can understand now. But at the time, it was not understandable at all. Okay. Timeliness. I mentioned financial statements 20 years ago. Those are not timely. Okay. And we've gotten it down to where it's a very short window between when the period closes and we publish those financial statements, those audited financial statements. But there's always a push to have it a lot quicker. Okay. It's really hard to audit a company and get those financial statements out to the public really fast because of the auditing process. Um, when I was working for the place that I worked at in Washington, D.C., Harmony CPA, we had a lot of restaurants, and I thought it was really strange at first, but then it kind of made sense. So, like most businesses I've worked for, we did bank reconciliations once a month. We actually did bank reconciliations once a week because with that came recording all the sales, all the expenses, and everything every single week. And so every Monday, I'd have 10 restaurants' bank reconciliations that I would have to get done. And they weren't small, they were huge reconciliations. So I'd sometimes get started on them Sunday so I could finish on Monday. Okay. But those restaurants needed that feedback really fast because, if we wait a whole month before we give them some feedback, timely feedback, whatever they were doing could have already bankrupted them. Okay. So timeliness is very important. Now, in this case, we were not talking about public financial statements. We were talking about financial statements just to management so they could make decisions. Okay. Verifiability. You see how some of these are kind of going with each other in this conceptual framework. So verifiability, can we verify there's $1 million in that checking account? Can we verify that that customer actually really does owe our business $1 million? Okay. Then we have comparability. Okay. Comparability means that we can compare across different periods one one period from another. So we can actually compare um, those different periods. Okay. And then we also have this cost effectiveness. Benefits exceed costs. You do not want to implement anything that is going to cost you more than it will ever benefit you. Okay. All right. So we went through a lot. There was a lot on that one slide. I'm going to jump past some of these quick ones right here because I want to get down to these elements and then be able to finish up this video. Okay. Some of these you should know. If you don't know what an asset is at this point, I will get my Principles of Accounting 1 and 2 videos for you. You got to learn. Okay. But I think everybody that's taken intermediate accounting probably knows what an asset is. We have cash. Definition of an asset provides a future economic benefit. Okay. Liabilities. This will present an obligation for an entity to transfer an economic benefit. Okay. Remember the one that's tricky for liabilities is that unearned service revenue. This is where that customer gave us $1,000. We put the $1,000 in our checking account. We haven't provided the service yet. We don't owe them $1,000. We owe them the services of $1,000. Okay. And I like that they put equity and I like that they put net assets because, our accounting equation is this right here. Really, if we took the assets minus the liabilities, that equals stockholders' equity or equity, which is net assets. It's just assets minus liabilities. Okay. We can have investments by the owner putting money in the business, the owner taking money out of the business. Okay. Comprehensive income. This is probably the first time you've heard of comprehensive income. We will get into it a little bit more. It's sort of a pocket to put some things that really can't go to the income statement yet. But it sort of gets held up into comprehensive income and that stays in the stockholders' equity. Okay. We know what revenues, we know what expenses are, gains and losses. Those are things we don't have every day. Like maybe we sold a building and we had a loss on it. It's going to kind of be a little bit separated from the rest of the income statement because it's not something that's going to happen every single period. Okay. And I do believe that is all for Learning Objective 1-7. We will pick up on Learning Objective 1-8 in the next video.